Hi, everybody. This is Gary Dean, and this is our nightly video report for Tuesday, March 7th, 2017. I think the market's starting to show that it is quite tired from the big run that we saw from November. That really hasn't had too many breaks. Now, if you notice in the morning notes, I'm still kind of cautious about getting overly bearish right now, and the main reason is that we haven't really broke some important support yet, and the moves seem to be, there's no panic in them, and yeah, we're seeing drops, but we're also seeing when they do buy the bid that they're getting sold off. So I'm leaving it with the dynamics are changing. We have the Fed meeting next week, so I have a feeling that's going to kind of keep the markets in check. I ran through a couple scenarios that could play out into the Fed meeting, and one is that they kind of hold things up, and we get these little drops, and they bring it back up, and then come next week they give the that little melt up type say tape, and where we don't get too many pullbacks, they drive it into the Fed meeting, and they force the shorts to cover, and from there they may let it go pretty hard. Or another scenario is they drop the markets hard heading into the Fed meeting, cry like babies that they don't want a Fed hike, and try to scare off the Federal Reserve from raising heights next week. So no matter what, I still think things are going to be in check. I think after that, then we have options expiration that are on that Friday. So I think it would be safe to say let next week pass before getting overly bearish. Now, if we start seeing real breakdowns, then yeah, jump in, because we probably have a lot more room to go. If we bounce, do the same thing, layer in on strength. I wouldn't get too overly optimistic just yet. It still may take a little bit of time, but we're at the cusp right now where if things did drop hard, you got to accept that the top is in, and you just jump on the short side. Don't wait for a bounce. If you jump in short and it bounces, then you just you continue to layer in some. But if you're, kind of waiting for things, then just continue to wait. If they bounce and they say take the scenario A where they kind of hold things up and then grind it higher into the Fed meeting, get the shorts to cover, you start shorting then, and leave some open where if they decide to try to use the Fed meeting as an excuse to try to run things higher, even though it's just going to be a head fake, you just continue to do the same thing with it. So that's really what it is. Today we saw a little bit of selling off of yesterday's selling. Rallies are any buying attempts are getting sold off, but you can see there's nothing that's really broke right now. So I left it with the where we could be still have another push up to make a new high here. And the only reason I have for that is that we don't have any bearish divergences. So maybe that's where, they kind of go back and forth, and then use next week to start moving things higher to make the wave 5. But like I continue to say, I think that trade is dangerous just because we have so many bearish divergences that are already in place, that if they skip it, then that would make sense. Now, another reason why I'm not really say throwing all my eggs in the short basket right now is we still have this gap that's open, and I think it's right here, this gap. It's not really showing it, but there was a gap down. So most likely they're going to close these gaps before they head down. But again, that's not a trading recommendation. It's more just leave the door open if they head up. That's what they're going to be doing, closing these gaps. Now, if they head higher, then the only thing they're doing is simply making that wave 5, and they're going to form the bearish divergence. So no matter which avenue they take, once we have that move here, the next move is going to be pretty sharp to the downside. And most likely, if they can get it through this 2371 area, we're going to get a quick drop down to this 2327. If we start breaking that, that's when we start coming down into support areas. That's 2250, and 2165 is not out of the question on it. So I guess the best way to put it is we're probably closer to a top right now than we are an extended move to the upside. If they make a new high, they're just making the wave 5, and then we should head down. If they head down, then the 5's already in place, and we probably have a lot more to go. So we burned off some of the extreme overbought levels here. We're right around the, in the area where we've seen some turns, but we haven't really had any true breaks. So if it came down lower, that would make perfect sense. But if we take a look at the daily, that's just starting to cross over now. So that has plenty of fuel in the tank if they want to take it lower. So I think that the bulls, they really need to get it through this 2376, 2379 zone. If they get through that, they're going to have an easy shot up to the 2283 and then the 2388. Above that, then they're probably going to come up and close this gap near that 2395. The Bears, they need to really get it through this 2362. If they do that, then most likely we are going to get a move that's going to come down someplace in this 2327. But again, I don't mean to kind of jumping on both sides of the fence here. I don't know if anything important is going to happen until the Fed meeting passes. So, yes, I expect the bigger move to be to the downside. I think we're not even near point-wise what it could be, because I believe it could be as close as 200 points to the downside. I just don't want to get you guys all excited on jumping short on everything right now and then getting a move higher into the Fed meeting, which we've seen plenty of times, and then, get washed out of your short position right before the drop. So I'm trying to keep things open-ended right now, where if we fell, yeah, it would make perfect sense because I'm anticipating that. But if we rally, use that strength to, to build a short position and even leave the door open that we may make a minor new high, because that's going to set up the bearish divergences on the 60-minute chart. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.